Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Managing Director and Senior Technical Strategist Todd Sohn. Todd, how are you doing today?
Hey, Ross, I'm great. Nice to speak with you.
Good to talk to you as well. Let's start with something positive and optimistic. We just crossed the threshold recently into year four of this bull market that started on October 12th, 2022. What are your general observations about how bull markets that make it this long tend to last, and what year four often looks like for those bull markets?
Yeah, great question, and I'm a big fan of the anniversary of the cycle, as you mentioned, year four, October 12th, 2022. Here we are today, and what I would tell you about year four is, yes, the sample size does shrink a little bit, right? You lose some bull markets that may end in the first couple of years of their span. But more often than not, the average returns are decent, roughly 11% or so on average. Notably, the historical examples actually don't have many large drawdowns. So maybe that changes in 2026. We'll see. But the good news is things extend, and you typically see another year of life get breathed into the bull market. So listen, I get it. We're moving along the cycle. Rates are changing. The backdrop is changing. But the equity market is still very much in a bull market trend.
Well, let's talk about that changing backdrop. There's been a lot of headlines. We have this shutdown, China trade tensions ramping back up, credit worries with some of the regional bank stuff. When you're at this point in the cycle and you're evaluating a bull market and all of the potential headwinds, what are the things that you look at or the indicators you utilize to identify whether, a spot of weakness is something serious or maybe just kind of a healthy pullback and correction amid a broader bull market trend?
Yeah, so there's three inputs we want to consider. Number one is, what is participation, right? We live in a concentrated market cap world. I just want to know how many stocks are rising, how many stocks are in an uptrend. That's okay today. You still have over 60% of stocks in large cap indices above their 200-day moving average. Small caps just about making a new high for the first time in 4 years. So participation is okay today. Not the broadest market we've ever seen, but good enough to continue into this fourth year. Secondly, what do our risk relationships look like, right? What is the appetite for risk in the market? We queue off of discretionary versus staples. That's our market barometer. I'd also look at high beta versus low beta. Those are still okay, a little bit rickety recently, but that's all right. We'd get more concerned if you start to see things like rates decline and oil continue to decline, met with consumer discretionary weakness. That's not the case just yet. So we're all right with that. Our risk barometer is generally more supportive. And third, what does credit look like, right? Credit, the word cockroach has been brought up in the headlines a lot. Credit spreads, whether it's high yield or investment grade, generally closer to their tights than making new wides just yet. If that backdrop starts to change, that's when I think you want to start to at least put up the yellow light. But thus far, credit spreads very much behaved still in their bottom decile historically. So unless I see credit deteriorating, participation deteriorating, and our risk barometer deteriorating, it's hard to get too negative. Of course, you'll get some speed bumps along the way, but each of those suggests that a monumental decline or a deeper recessionary type environment is off the radar for now.
Yeah, there are plenty of healthy corrections that dot big bull markets. So it's good occasionally to reset sentiment and take a pause. I want to shift to something a little more granular. You all have recently written about the industrial sector. It's a sector that has done well. I think it kind of sits kind of in the middle of the pack, but it's a unique sector. It's very diversified, very broad in terms of the types of sub-industries and the types of companies. What are you seeing from the industrial sector? Are there any kind of categories or slices of it that you like more than others right now?
Yeah, and you mentioned industrials are diverse, right? You take the three largest stocks in each sector, and the industrials add up to the least amount of any of the sectors out there. The three largest weights are some 16 or 7% of the index. So it's very diverse, ranging from machinery to transports to professional services. And so if I'm looking for opportunities, all right, the transports are an interesting group. They have been in a sideways, big trading range for the last 4 years, kind of like small caps. And that's going to be your road and rail type of names, the airlines, package delivery type companies. We think there might be an opportunity there for some of the more tactical players who are looking for a catch-up trade. I'm curious if this perhaps comes at a cost of, say, the power names, right? Power generation has been a big theme for us. Those names have been fantastic. Perhaps a little bit overheated, a little bit too much enthusiasm around that theme. And I tend to wonder if there'll be a little bit of rotation into the more transportation type areas, particularly because we have the World Cup coming next year. You have tax refunds coming. Maybe consumers are going to be traveling more. That ideally benefits the transportation names. Or if they're spending more money, maybe that benefits the truckers who are going to have to deliver all these goods. Just thinking about things that way. But again, going back to areas that have not worked, that have been beaten down, transportation stocks would be atop that list that we would consider looking for within the sector.
Yeah, that's really interesting. And again, a super unique sector, especially as you mentioned earlier, in such a concentrated world that we live in today. So Todd, thank you so much for the time as always. Super insightful, and we'll look forward to talking to you again soon.
Thanks, Ross. Appreciate it.